I just want to get this in here quickly and keep you guys updated because there's a lot happening right now in the markets. Inflation's still running hot, new tariffs are shaking things up, and the Federal Reserve just made a huge revision to their economic forecast. Some investors are panicking, but others they might see as an opportunity. All right, let's start with the inflation. Because if you've been to the grocery store lately, you already know the numbers don't tell the whole story, right? Officially, inflation is the higher than expected, but in the reality, prices have been stacking up year after year. The cost of food, housing, and just about everything else is still rising. And while the Fed keeps saying they're working on it, they don't actually want the prices to go down. They just want inflation to slow to around 2% a year. The problem with this, we're not there yet. Every time inflation comes in hotter than expected, Wall Street reacts like it's a shock. Like they haven't been watching the market prices go down up in the past 4 years. And if you're earning a salary that isn't keeping up with inflation, you're effectively getting more poor. Your paychecks buys less unless you're actively finding ways to grow your income. This trend is not changing anytime. Now, as if inflation wasn't enough, we've got new tariffs shaking things up. The US just slapped a 25% tariff on foreign cars, and while that sounds like a move to boost American manufacturing, here's the reality. Tariffs are just taxes, and companies don't like eating extra cost. And what they do here is we're the ones getting affected, right? The consumer. That means car prices could go up, but beyond that, tariffs create uncertainty. And if there's one thing Wall Street hates, it's uncertainty. No one knows how other countries will respond. Will they add their own tariffs on American goods? Will companies start moving factories to avoid higher costs? This back and forth game can spook investors, but it also opens doors for those who know where to look. Because while some companies get hurt by tariffs, others benefit. If more manufacturing moves to the US, that could be great for certain industries, constructions, logistics, even specific stocks tied to domestic production. The key is knowing where to shift your focus. But let's talk about something that really matters, consumer sentiment. How people feel about economy plays a huge role in what actually happens. When people are confident, they spend money on homes, cars, vacation. When they are worried, they cut back. Right now, consumer sentiment is at its lowest since late 2022. Now, spending hasn't dropped yet. People are still swiping their credit card like there's no tomorrow. But rising debt levels are shaky confidence could mean we're on the verge of a pullback. That's why the Federal Reserve just adjusted their GDP growth forecast. Again, a few days ago, they said the economy would slow by 1.8. Now they're saying 2.8. That's a huge revision in a short period. And it tells you that they're not as in control as they want to believe. This kind of uncertainty is why gold prices are hitting record highs. Historically, when people lose faith in the economy, they move their money into safe haven assets like gold, Bitcoin, and that's exactly what we're seeing now. So, what does all this mean to you? If you're thinking short term, this might seem scary, but if you're playing the long game, this is just part of the cycle. Every decade, we see major market drops. People panic saying this time is different, all that stuff, right? But history shows the market recovered and moved higher over time. The investors who stay calm and look for opportunities in the downturns, they are the ones who build wealth. The key is to focus on where the money is moving. If people are start cutting back on spending, discount retailers are and budget-friendly brands could benefit. If tariffs push companies to build factory in the US, industrial stocks might get a boost. If inflation stays stubbornly high, assets like gold and Bitcoin might see more demand. The most important thing you can do right now, have a plan. If you don't have extra cash to invest, your first step should be securing your own finances, paying down high interest debt, building cash cushion, and making sure you're not overspending. Once you have the money to invest, then you can start looking for opportunities. Here's the thing, Wall Street already knows this game. They expect retail investors to panic. They wait for the people to sell at the bottom, and then they scoop up the assets at a discount. But you don't have to fall for all that. If you don't understand how the market moves, you can position yourself to buy. Others are fearful and profit when things recover. This is very important, is to be a long-term investor. At the end of the day, the economy moves in cycle. Inflations, tariffs, market drops, they're all part of the bigger pattern. The question is, are you going to let fear control your decision? Or are you going to step back and see the bigger picture and make moves that set you up for a long-term success? With all that being said, if you found this video helpful, make sure to subscribe for more insight like this. Drop a comment below. What do you think? What do you think the market is heading to? Are we heading for a crash or is this another bump in the road? Let's talk about it. Thanks for watching, and I'll see you guys on the next one. Peace.